Hello, welcome to Venture Capital. This week, Spain managed to drag itself out of recession. But is it too early to get excited? Well, I get expert analysis in just a moment or two. I also bring a real Spaniard into the studio to get his take on the situation, as well as that spying allegations between the US and Europe could affect a multi-billion-dollar trade deal. We've got corporate news to come, as well as Mr. Sean Thomas, our in-house investor. He talks to us from Singapore. We'll see how he's getting on with his trades. That's all still to come, but let's start with Spain. So Spain's economy is officially out of recession after more than 2 years. Growth in the Eurozone's fourth biggest economy grew 0.1%, driven by exports. And with the country's main stock index having gained over a fifth this year, with foreign investors becoming attracted once again to the nation's markets, so it seems. But when it comes to the real economy, the story is quite different. Domestic demand remains flat. And even though unemployment has fallen slightly thanks to a busy tourist season, over a quarter of Spanish people are still unemployed, and 1 in 2 young people are still unable to get a job. So to get a better idea as to what's happening to the Spanish economy, I'm joined right now by Steen Jacobsen from Saxo Bank. So Steen, as we know, the Spanish economy managed to drag itself out of recession. We've got a growth of 0.1% now. Can I just get your view? What do you take from that 0.1% growth?
Absolutely nothing. You have to remember, it is very easy for a country like Spain to create a little bit of growth because the base, i.e. the number you compare with, was already very low. So everything being equal, it's good that Spain is seeing positive growth, but 0.1 can be revised into a recessionary number next time we have the first revision. So, you know, everything being equal, this is just another story of how hard it is to get any traction in terms of growth when you don't work on real reforms and when you don't work on the supply side of the economy. So
would you say that the excitement that maybe politicians are perhaps focusing in on is all an illusion, would you say?
I would say the politicians are easily excitable people who have very little knowledge of economics and how it is constructed. They continue to celebrate a 0.1% growth number when we know a true recovery would have a trend growth of about 2%. And 2% is very unlikely. I think it's more likely that I'll be selected to play for the Danish national football team than any of the countries in peripheral Europe will get to 2% inside the next 3 years.
Mm-hmm. And actually, Steen, I do want to talk about unemployment because it has improved just by a smidgen, but it's still dire, isn't it? The unemployment rate in Spain, 26%. How much of a problem is that?
If in the face of the politicians, it doesn't seem to be a big issue because they are more concerned about creating the financial stability. And I think that is, to some extent, very sad and, again, very short-sighted because it is a huge problem when you lose a whole generation of youth. Just think what it does to productivity. If your company didn't hire anyone of the age from 20 to 30 for the next 10 years, you will all be 10 years older. You'll all be going to the same cafe. You'll be reading the same newspaper, and you will all have the same opinion. Every single organization in the world, whether a voluntarily one or for-profit organization, needs young people to push, to be aggressive, to have new ideas. So you're creating a very stalled and very non-dynamic society by giving up on the youth. And the youth is what we needed. It is the activation of youth unemployment that will create the real growth. And then you and I will be celebrating 2.5–3% growth in Spain instead. So in my opinion, it is the one issue left on the table which no one wants to touch, which no one sees any solution to, but at the same time it is the exact same question you need to deal with, and that I think is what 2014 will be all about.
Okay, Steen Jacobsen there from Saxo Bank helping us crunch up those numbers there. But we're going to get some realism now from an actual Spaniard in the studio just here to give us an idea as to what's really happening there. We've got Bricio Segovia from our Spanish channel here at RT. Hello there. So what is going on then? As I say, you're Spanish. What's the general mood at the moment, would you say?
Well, the general mood now in Spain is really bad. It's very pessimistic. People are not happy about the situation, of course. And the problem is that people cannot afford living on their own, especially the youngsters. I mean, right now, over 45% of people under 25, they don't have a job. I mean, how can you afford living on your own? So basically, everyone is going back to their parents' home. They cannot leave. Maybe you are 40, you are 30, but you're still at home. There's no way out. I mean, with salaries ranging between maybe 800 to 1,000 euros per month. That's the average right now in Spain. I mean, if you take into account that an apartment, it's about 800 euros a month. I mean, how can you do it? There's no possible way.
Left for food.
There's no possible way. Exactly.
Because I've heard some crazy examples of, say, cemeteries, people taking their relatives out of graves and putting them in a lower standard of a cemetery, which just sounds absolutely crazy.
I mean, it's crazy.
But these stories are happening.
It's crazy, but those stories are happening. People cannot afford, you know, whatever they're paying, cemeteries, for instance. I mean, also, there's this trend of young people who were in Spain are fleeing the country. Right. Because there's no future. And there's even this generation that is being called the lost generation because they have no job. So just to give you a personal example, most of my friends from college, I mean, they are either working abroad or working pretty much for nothing in Spain, or, I mean, yeah, that's pretty much it.
That's
or unemployed.
Pretty sad, really, isn't it? Yeah. It's a vicious cycle. Goodness me, a sad state of affairs there. Well, gracias, Bricio, just there. Thank you for coming in. Pleasure. And the next time you make an international payment, you might want to consider who is spying on you. That's exactly what the US is accused of doing on European ministers and citizens, actually. And as a consequence, the European Parliament voted to suspend cooperation with Washington in a financial data sharing deal. This is in response to allegations made by former US intelligence contractor Edward Snowden that the NSA spied on bank-to-bank messaging via the Society for Worldwide Interbank Financial Telecommunication, otherwise known as SWIFT, which you've probably heard of. So we've got RT's Berlin-based correspondent Peter Oliver right here now to talk us through the situation. How much of an impact is this having on the economic relationship between the US and Europe then, Peter?
Well, the general reaction here in Europe over all of the NSA spying stuff is that these are spies. Spying is what they do. But when it's come to business, well, there's a lot of trust that's involved in the deals that go on across the Atlantic, and it has really damaged that trust. We were talking to people for other shows on RT about the a base level of trust that now has been perhaps irreversibly damaged by the spying that's gone on. We've seen that the European Union now certainly doesn't essentially trust its US partners. It's voted to suspend relationships that would have exchanged data with them, data which was supposed to be there to help combat terrorism, which it turns out may have been used to try and look into business deals as well as look into the private banking finances of European citizens. So what is the big problem is trust, and that's just not there anymore.
And Pete, it seems like bad timing because obviously we've got the transatlantic deal still pending between the two economies. How much do you think of a fallout we could see then, do you reckon?
Well, this is a potentially multi-billion-dollar trade deal between the United States and the EU, and the spying saga is really hanging over it like a dark cloud. The negotiations have stalled time and time again. There's been various reasons for that, but what we are seeing, particularly here in Germany, is the Social Democrats, who look like they'll be the coalition partners of Angela Merkel in the new government, have said, how can we possibly sit down with the Americans to negotiate trade when, for all we know, there could be microphones under all of our desks, cameras in all of our private conference rooms? It could be the final nail in the coffin for that trade deal. It's going to take a lot of negotiation to try and wrangle around that issue.
And we've got billions of dollars at stake, as you say, Peter just says. That's Peter Oliver right there, our Berlin-based correspondent, talking to us today. Thank you very much. All right, time for corporate news now then, with the world's fastest growing energy market and the world's biggest oil producer. Yes, I'm talking about China and Russia. These two countries signed 21 trade agreements this week. Rosneft, the world's largest listed oil producer, will supply China with up to 100 million tonnes of crude over the next 10 years. Over the last 10 years, Russia has been keen to move its energy trade from west to east. This is in response to falling demand from the European financial crisis being one of the reasons, and also Europe's desire to diversify as well. So with China, the world's most populated country and still growing as well, Russia is keen to capitalise on this market more than ever before. Yandex, Russia's biggest search engine, has reported a 40% rise in third quarter sales. The jump is due to a deal with rival Mail.ru for search-based online advertising. Russia is Europe's largest internet market by audience. Now it's time to check in with Mr. Sean Thomas, our in-house investor. OK, you went all in into financials then, didn't you? You were going to be brave and just put it all there. But what happened then? It didn't work out.
Well, I got a little bit greedy because if you remember the financials, and I was in Bank, which is Russia's largest lender. Now, for 3 weeks in a row, they had an increase of 1% each week, which means I was going gangbusters. Unfortunately, I stayed in too long. But right now, if you look at my numbers, I have $9,930 in my portfolio. So I'm down still, but I'm still hanging in there. I'm not losing too much. So that's where I stand. OK,
I'm going to presume that you're going to diversify now then and not just put all your eggs into one basket, as it were. So where else are these eggs going to be going forward?
Well, I'm getting out. I'm absolutely getting out
completely
of the financial industry entirely. And earlier in the show, you talked about Yandex. And so this is Russia's internet search engine, kind of like Google. In fact, their headquarters are not far from where I live. Their shares are right now lingering around the same IPO price from 2011. And this is cool because they just recently announced record-breaking profits. So if I can get some in on some of those stocks at the original IPO 2011 price, and that information pushes my portfolio up, I think that's going to be the best thing that I can do.
All right. Sean Thomas, thanks ever so much. Enjoy Singapore and looking forward to seeing you back to the headquarters next week. Now for news I'm just a little bit excited about right now, the fact that Walt Disney intends to open 3 stores in Russia next year. They'll be located in Moscow and St. Petersburg. The company already has almost 370 retail stores around the globe, and that makes up 8% of the corporation's income there. You can't help but smile, can you, when you talk about Disney? Love it. That is indeed venture capital for this week. We've been all over the place. We've been to Denmark, Germany, and we've been focusing on Spain, of course. We went to Singapore as well, didn't we? So we've had a busy time of it. But I'll be back, same place, same time next week. So join me then. Goodbye.